The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw the wheat markets continue their rally on the day Wednesday. This time it was Kansas City wheat, the upside leader, but all three complexes found more strength with some short covering. Corn and soybeans a little more mixed and muted on Wednesday's session. And we got some more headline risk, it sounds like, in this cattle market to discuss. Joining us now for a conversation, Mike Zuzolo with Global Commodity Analytics. Mike, good to talk with you again this week. And no shortage of topics to discuss. I guess, hey, I'll start with our old friend, the wheat market. What a couple of days here in this wheat trade, Mike.
Yeah, we better enjoy it while we can. We've finally gotten that wheat-led April rally that's taken hold here, Jesse. We've rallied more than one day. That's got to be a record in the record books here for the last several months. The thing that I think is important to pick up on when it comes to what you said was the hard red wheat coming in and leading the show. And that's really what needs to happen, because our model year has been 2009 as far as what the potential move to the upside and the timing of that. And this is something you and I have looked at for several weeks now, is that late April time period of 2009 was a time period where the market really found some support and headed higher. The exact opposite was the case in 2015. And so we've got the geopolitics back in play. We've got the weather in Europe back in play. And as of Monday afternoon's crop conditions report, the fact that we're down about 24 points in Colorado in Oklahoma versus the 1st of April, and 12 points lower in Kansas versus the 1st of April in good to excellent conditions. You pin that up against the 12% corn planting number and the 8% bean planting number, it would make sense that the wheat would need to continue to lead this market higher, fundamentally speaking. So that's kind of the launch point for where we are at here at midweek. I don't mind corrections on a daily basis, but this is one of those markets where, as we'll look at in some of the charts that I've provided to you today, we'll need to see a continuation and the momentum continuing to go higher if this is indeed similar to 2009.
Well, let's look at our first chart, the HRW wheat historical, and I'll make this comment. I've been watching the short covering happen here in the wheats in the rally, and I've been saying to myself, okay, I want to see follow through. I want to keep seeing follow through, and was waiting for the other shoe to drop. Well, knock on wood, so far, three sessions in a row, we've continued to follow through here. So talk about that a little bit and what you're seeing on the HRW chart right now.
Yeah, and this is really important from a standpoint of the SRW had been able to make new, essentially 3-month highs. We got above the April high, we got above the March high, we even were knocking on the door of getting above the February high earlier this week. I think it was on Tuesday. The idea was that the hard red wheat, though, should be the main leader to the upside. But I do think that's worth noting the soft red wheat working in conjunction with the hard red wheat is very important, because at the end of the day, what you and I have been talking about for several weeks now is the idea of an April rally, of a wheat-led April rally, because we were going into corn and bean planting, and we knew there was a lot of supplies of corn out there, and to a lesser degree soybeans because of the last WASDE report. But the idea was we've got a lot of funds that are short in a big manner, and do they really need to be this short? And I think when we talked about the wheat-led rally, I talked about the Federal Reserve and I talked about China. I think we've dealt with both of those very, very nicely in terms of the currency markets and also in terms of the bond markets and the stock market as well. But I think it's really been the Chinese news, the GDP number this week, earlier in the week being 5.3% for the first quarter. The fact that their purchasing managers indices are going positive again and showing expansion for now. And I'm not saying we're out of the woods yet with China, but I think this comes together with the idea that copper and wheat tend to trade fairly closely together. And with that hard red wheat leading, we do have a base now built that hopefully by the end of this month, we can get some higher price levels in place to get some new crop hedging done in corn and beans, and maybe even wheat as well.
Let's look at the Bloomberg Commodity Index. You and I look at this pretty regularly, and we watch this short covering type of rally of the wheat trade. Anything new stand out to you in terms of the Bloomberg Index?
Yeah, I think the big thing that we've seen now since we tested the major support line for a third month in a row a week or so ago, we are now making new monthly highs, and we've been able to take out, as of Wednesday, take out the March highs in terms of this commodity index, this grain commodity index, and we are now up against resistance. And if you blend together this chart with the hard red wheat chart in 2009, I really want to illustrate and hammer in the point that you need firing on all cylinders at this point. If we're going to break above this major trend line of resistance, we need the outside markets on our side. We need the dollar, especially. I went back in the Commodity Research Bureau, the CRB annual books that I have about 20 of for the last 20 or so years. And it showed very clearly in the 2009 highlights that part of the reason why the wheat market was able to recover in the hard red wheat was a tighter supply, but it was also the fact that the U.S. dollar made a high in the month of April or early May, and really went down from that period all the way into the end of 2009. And that was because the dollar had been bought as a safe haven against the financial crisis, and the market kind of signaled the all clear on that. And so this is, I think, another common theme with 2009 that we're dealing with right now. We're trying to signal the all clear when it comes to China. That should mean the dollar takes a break, and it should mean the Chinese currency, the Brazilian currency, the Japanese yen, they all firm up here as we get into the later part of spring.
Another chart you have with us here today. This one looks fairly interesting. The FAO food versus the US dollar. And you got an interesting kind of convergence point, it looks like, highlighted on this chart. So, what do you see it here, Mike?
Yeah, this is one of those charts that, really tells you a lot when you look at it. And this goes all the way back to 1993, 1994. That you see these two lines, the FAO food price index versus the spot dollar, and you see how opposite they move. When you're making a major high in the purple, which is the dollar, you're typically make major lows in the food price index. And when you and I talk, I oftentimes will say the dollar going up is deflationary, the dollar going down is inflationary. And this is why I say that, is when you see the dollar go higher and you see that major low in the food price index in 2000 and 2002, that was our peak deflation time period. And so you contrast that with 2008, before the financial crisis, and we were running very hot in the food price index. The dollar was on major lows, very inflationary. Then that financial crisis hit, and what I've highlighted in the green rectangle is that break in the dollar in 2009 around April, May, and that gave us a base to build upon in that FAO food price index. This goes to my special report that I've been working on. I got part one out last weekend to clients and subscribers, Jesse, but part two is going to deal specifically with food and with the dollar. And this is a key chart. This is kind of a look into the analysis of that special part two edition. And if we're going to build upon the food prices and see food go up like the gold has gone up, we really do almost have to have the dollar breaking lower at this stage. And finally, on this chart, what I'll show you is look at where the dollar was at the end of 2009, at the end of that rectangle, versus where it is right now. We're trading 105.80, 106. Back during that time, we were trading 75.76 on the dollar. We got a long way to go in terms of moving down in the dollar to ignite that demand story all over again. So this chart really does kind of speak to me and suggest to me that yes, we have inflation. Yes, we need some premium in the commodities, in the food commodities too, but we are a long distance away from having an inflationary demand-led market right now in the grain complex. I think that's really important if this rally can continue to hold itself together the next week to 2 weeks.
Well, and just to kind of summarize the wheat trade here a little bit, Mike, the weather concerns in the U.S., in Europe, it really feels like all of that together is the main catalyst here. And I haven't seen much else in terms of supportive news. Maybe I missed it, but it just feels like this is all weather driven right now.
I really think it is too, and I think it goes back to Russia and it goes back to their supplies of exportable wheat at low prices. That time period looks like it's finally over with, and in part that's due to the weather. I mean, the drought that the Black Sea region is seeing in parts of Ukraine and in parts of Western Russia is pretty severe right now. And then you contrast that with the Urals in eastern Russia, Kazakhstan. They just lowered their wheat crop because of the historic flooding that's going on in the eastern part of Russia and the Urals regions. And then you have the Chinese situation where you've got 50-year flooding going on in Guangdong province, which is deep south in China. Not big wheat country, but it's pretty sizable rice country, Jesse. So that's another feature to this market, another leg to the stool. And I think it's important, especially to keep all this in mind, along with South America, along with the corn market, because of this HPAI. We've got this black swan coming out again on Wednesday, unfortunately, and it's something we're probably going to have to contend with. It's probably going to test our nerves when it comes to this rally that we're in right now.
We are joined today by Mike Zuzolo with Global Commodity Analytics here on Market Talk. And Mike, as you mentioned this there, the HPAI news, I want to get to that in a second. I do want to ask in terms of the corn and soybean markets, though, to kind of wrap the grains here a little bit. I'll pull up a world corn prices chart on the video feed for us. Quarter beans a little more muted on Wednesday. I've heard some chatter that maybe there's some increase in farmers selling that's capping some of this rally in quarter beans compared to wheat. Talk about that and maybe what you're seeing in terms of world corn prices right now, Mike.
You know, some of the basis levels, especially at the river and corn, have been coming down with this futures rally. I think that's natural. I think also what I've been hearing in Illinois and Indiana and Ohio, Jesse, is almost the exact opposite, that those guys in a lot of areas north of I-74, north of I-70, that maybe the top thirds of Illinois, Indiana, and Ohio, they're really not getting much done between the cold, wet weather. And so this got me to continue to keep looking at what's going on in South America. You and I have been talking about Argentina. We've been talking about Brazil, and if it's really got problems, and we should start to see it in the pork prices in the export market. I looked at this chart yesterday. It had not moved much. When I looked at it today before today's show, I was really happy to see the Brazil line, the Brazil corn, which is in purple. That's your purple line, and your French corn price, which is in blue. Those two are running neck and neck with one another, and we're actually seeing the Argentine corn price go up as well now, and that's your green line. It's really nice to see 3 of the 4 of your major competitors really start to go higher than you. We're now at a point where in the corn futures in Paris, in the Matif price, we're over $1.30 over in EU versus CME corn prices. And you can see this chart shows that we've gone essentially from $200 a ton up to almost 220 between both Brazil and French cash corn. And we've also seen the 190 level to $200 level when it comes to the Argentine corn price. And note the Ukrainian price at the bottom in orange. It too is now hitting levels in brand new 2024 highs at this point, or getting right up against those late 2023 highs. This is a really solid piece of the puzzle when it comes to the corn, and I think it being able to be supportive of the wheat rally. So the key now, and this is what I've been talking to clients about all week, the key now is to get May corn, which is getting ready to go in delivery, to get it above 448, 449, because 448 was your March high, 448 and 3/4 was your February high. Let's go above 450 on a closing basis, and all of a sudden we're talking about new 3-month highs in the corn market. And I think that could uncover some additional strength, maybe 20, maybe 30 cents. And it goes back to what's happening in both the Ukraine, French wheat, French corn, and also Brazilian corn.
Let's talk livestock. Let's talk cattle specifically here, Mike. And it seems like that news cycle, you alluded to this earlier, kind of coming back around and haunting this cattle market again. At midweek, we got the reports of fragments of the bird flu found in milk samples, FDA reaffirming that pasteurized milk safe to drink, but still it's in the news cycle. Then USDA on Wednesday, they came out with federal orders, mandatory testing for interstate movement of dairy cattle, and mandatory reporting. So some of these news headlines, it appears, having an impact in this cattle market again. Futures down on Wednesday. Your thoughts on all of this activity here midweek?
I think for the listener and the viewer, the key with this market was to get it out of the news as far as this type of feature in the news headlines, because the funds play off of this and the consumers play off of this. And I was very happy to call a low in the cattle market, in the feeder cattle, especially after the cattle and feed report and the subsequent strength that we saw after that, led by the feeders, as long as we didn't have HPAI come back in the news. Well, this morning when I woke up, I saw that Good Morning America actually talked about milk samples having HPAI. And the headline from the Washington Post that I think really needs to make us stand up and take notice of this issue and not try and sweep it under the carpet and say, this is, really just about bad media attention. It could be about that, but the Washington Post reported that it was in milk that was in grocery stores. When I see stuff like that as a livestock and meat analyst, you do not want to see anything close to that. And in that same article, there was a public health official that said the fact that it got to this point means it's worse than we thought it would be in the dairy cattle. That was this morning at about 7 o'clock, Jesse. And then we got the USDA coming out with this mandatory reporting on going across state lines of dairy herds. That suggests that public health official was right. This is a bigger problem than APHIS and USDA wanted to acknowledge 2 or 3 or 4 weeks ago. Maybe any of us wanted to acknowledge because we didn't want to blow it out of proportion. But it's a real deal now, so we really got to stay on top of it. And what that means to me is last Friday should have been a low in this market. I don't want to take out last Friday's lows in feeders especially, or fats, but especially feeders, because they've been the leader to the upside.
Let's look at a couple charts, monthly feeder chart as well, just to kind of maybe echo along with some of your points there. What do you see it on this monthly chart after Wednesday?
Yeah, the big thing here is if you take a step back and you don't care about what the news says, this chart still looks like a double top. You've got one high made back in late 2023, and then you came up with another major high right after we crossed into 2024. This market was, I think, on track to try and take out that double top and go ahead and extend the gains, because the cash market, let's face it, has been running 260, 265, in some cases as high as 280 for the feeder weight steers that we've been seeing sold. So it would not be hard for us to take out that 257, 258 old high from last September just because of what the cash market's been doing. Now, unfortunately, I'm going to have to go back analytically and say we're still stuck in a double top until we take out some of these major highs. And, those major highs being this current monthly high of around 250. That's where we really got to start, is get those April feeders going off the board this week. May takes over as lead month starting Monday. We need May feeders back above 250 on a closing basis. Then we can start talking about going up another leg again. The downside, though, is potentially what we really have to watch now more. And we did see in today's price action, the June fat cattle had a report day low of 174.58. We took that out with 174, I think 22, something like that. We did take out the report day low on Wednesday in the June fat cattle. The report day low for the feeder May feeders was 241.13. And so that's the number we don't want to take out, because then that opens us up to going into the monthly lows at this stage.
Feeder fat spread as well. I'll pull this chart up here real quick just to kind of wrap our cattle discussion for you to expand a little bit more. Talk about what you're seeing here between the spreads right now.
It had a nice correction in the feeders against the fats. That's cyclically what's happening about every year, going back 7-8 years, is we tend to put lows in the feeders against the fats, lead month basis in the first quarter, second quarter. Doesn't happen every year, but it's something to really look at. I want these feeders to start going up against the fat cattle again on a cycle basis. You notice in 2014, going back to the very beginning of that chart, we were able to get north of $80 premiums in lead month feeders against lead month fats. That's the type of price action we want to get back to in terms of breaking through $65, $70 and going back to highs like we saw back in 2014. But if the feeders can't do it, then it gets me very, very nervous that the fat cattle market is going to get weaker, not stronger. And I'm going to have to go back to what we talked about 2 weeks ago, and that is getting floors underneath me if we can't get out of this mess that we just started to get ourselves into on Wednesday.
Well, I know hogs too were down on Wednesday, the dairy market in the red too. So I think overall this protein sector, this livestock trade, just got to watch the news cycle, unfortunately, and be smart here in this window, right, Mike?
Yeah, and the funds had covered a lot of their short positions, and so they could get short again. I'm not trying to promote that. I want the prices to go higher, but I also want to be realistic about what has happened in the past in a fund versus fundamental type market environment. And if we start seeing cancellations of beef export, U.S. beef exports by certain countries, that really makes me nervous, because then the consumer domestically is going to have to eat more beef because we can't get it out the door. So stock market, dollar, all these things still important, but unfortunately HPAI is back on our plate as far as a news headline item to have to discuss.
And that is a rumor that is out there that I'm working on maybe following and getting some confirmation on. I've even reached out to USDA for their thoughts on some of that potential as well. So we'll see where this news cycle goes. Mike, great stuff as always. And I know you mentioned you're working on special reports and more. Folks can find you very easily online and connect with you, can't they?
Yeah, globalcomresearch.com and globalcom with 2M's research.com. And if you have any questions as a cattleman, just fill out the trial newsletter or trial subscription piece on the website, and just post a question in the comment section.
Globalcom with 2M's research.com. Mike Zuzolo, Global Commodity Analytics. Thank you, sir. Appreciate the time. We'll talk to you next week.
Thank you, Jesse. Take care.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.